Hi, this is Adrian from Trend Signal. Just want to take a moment to take you through, I guess, one of my favorite sort of patterns, really. And we can see it here really clearly on oil. This is NYMEX crude oil, and we can see a number of great trades over the last few weeks there, notwithstanding a pretty smelly opportunity there. So looking at the sniper trades, the outline suggesting which way for the trade. So green outline suggesting a buy, red outline suggesting a sell or a short trade there. What I want to draw your attention to is this arrow here. This is the monthly trend. So when the green line is pointing, arrow is pointing up, it's suggesting an uptrend. If it's a red arrow pointing down, it's suggesting a downtrend. So that's really important in terms of the longer term analysis, i.e. what kind of phase are we in? Are we in this kind of a phase? Are we in a sideways phase, downward phase, and so on? So when this line is green, it's suggesting that the most likely scenario is shallow pullbacks followed by bigger moves to new highs. Okay, so when we look at this chart here, let me just get those scribblings off. We can see the scenario that we've got. So we can see an uptrend. So the monthly trend is up when I put my cursor over this buy from the 4th of August. And that's led to a nice buying opportunity. And it was a nice winning trade, which was then followed by another nice winning trade here. The sell trade here. It's really tough to take those shorts against the trend. If you're going to take them, you've got to be selective. You've got to be looking at thinking, well, this is fine, but if I'm going to take it, I want to be getting out of those trades as quickly as possible, because the more likely scenario is a move back higher. This then actually leads to what we call a continuation trade, and you can see the weekly trend up, the monthly trend up, the resumption of that longer term trend. The point being that the safer trades are in line with that trend. But you know what? Trends will eventually stop. They'll run out of steam and they'll start to go out the other way. And when I look at these charts, when I look at specifically the sell trades that are on here, there's one of these that is the real standout. Yes, it's the biggest move, but also in terms of our ability to identify it and to trade it with confidence. And the reason for that is that trade A and trade B really are carbon copies of themselves. Yes, it's all easy to look after the event and say, well, of course we could have sold at B and it would have been great, but there's nothing really that looks materially different to A that would have led you to really take B instead and not A. Yes, it's easy for anyone to say it after the event, but in the heat of the battle, probably not. C, on the other hand, is much more interesting, because what you'll generally find is that these markets will move in waves. And often, if you know a little bit about Elliott wave, it talks about moving up in five waves. So A, B, C, whatever it is, 1, 2, 3, 4, 5, and then it corrects back A, B, C. Okay. And this is the most interesting part here, is that the trend will start to be turning when we start to no longer make new highs. And that's effectively what we've had here. So this is effectively trade B. This is effectively trade C. So as the market then rallied, it failed, didn't it? And this is this point here. It tried to have another go higher, but it couldn't do it. Couldn't take out the high from a few weeks prior, which meant it's starting to put in a lower high. And when it starts to put in lower highs, you start to become a little bit more bearish on this market. So whilst at this stage for trade C, the trend was still up, the pattern is starting to emerge that this market could be looking to break this other way. And that actually makes C a really high probability trading opportunity, because it is very different to A and B. Yes, they're both they're both against, all three of them are against those longer term monthly trends. But the context of this move is that this market is starting to break back down. And actually, in my experience, these are some of my favorite trading opportunities, because when trends reverse, they often reverse extremely difficult. It's not that first move that we can often get, because by getting trades like B, we're often catching trades like A as well, which are not particularly fun. Trades like C, however, when the market starts to say, whoa, actually, higher high, there, and then we start to put in lower highs, the trend is starting to move back round the other way. And that makes that sniper trade significantly more attractive to our traders. And this is exactly how we coach our members to trade as well. What happened from there? Well, with the benefit of hindsight, we can see it was a really nice, clear trade. And of course, it was. This market's fallen best part of about 20% over in oil, particularly when we saw this market moving down from Friday last week as well. The point being, regardless of whether this is oil or any market, it's starting to look for those trends to reverse, because the second move is often far bigger than the first, far higher probability, and a much preferable trade as well.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.